Good evening, everyone. Welcome to HCLTech's second quarter fiscal 24 earnings announcement. Today, I am joined, as usual, by our CFO, Pratik Agarwal, our Chief People's Officer, Ram, and our President of Digital Foundation Services, Jagdishwar Gattu, is also joining us today for this conference. Uh, So I'll start with the business performance for the quarter. This quarter was definitely a very strong quarter across all dimensions of performance. Our revenues grew 1% sequentially and 3.4% year on year in constant currency. Our services revenue grew 1.6% sequentially and 3.4% year on year, again on constant currency. One of the big highlights of the quarter is our operating margins. We recorded an 18.5% operating margin, which is a 154 basis points improvement at the company level. And at the services level, the margins improved by 212 basis points. This margin improvement is primarily through driving efficiencies in our managed services engagement through automation and AI capabilities. We also significantly reduced our dependence on subcontractors. We used our own employees to replace subcontractors. And we also controlled some of the discretionary spend like travel and other costs during the quarter, which eventually has delivered an exceptional margin performance. Another very big highlight for this quarter is our bookings in this quarter is at an all-time high. And for your reference, the booking numbers that we share is the TCV of the net new deals. It does not include rate card deals. It does not include uh, uh, renewals. All of that is not included. These are new contracts signed with customers. It's at an all-time high at $4 billion. This is a 154% growth from a quarter-on-quarter perspective and a 67% growth on a year-on-year basis. To get into some more details of our quarterly performance, our service revenue, IT and business services grew 4.6% on a year-on-year basis and 0.9% from a quarter-on-quarter uh, perspective on a constant currency basis. Our engineering services delivered a very strong growth of 5% sequentially on a constant currency basis, including the ASAP acquisition that concluded on 31st of August. HCL software continues to grow well. They continue to deliver 3% plus ARR growth. From a overall revenue perspective, 3.6% year-on-year growth in constant currency in our HCL software business. Four of the verticals uh, grew very well. Our retail CPG vertical grew 7.5% quarter on quarter, followed by telecom and media, which we had highlighted last quarter that it was weak, but this quarter telecom and media vertical has grown 6.2% quarter on quarter, which is again a fantastic performance. These are really attributed to very good execution of the deals that we won in the previous quarters, which is really translating to revenue. We continue to have a strong run in our financial services and our life sciences verticals, which all reported good growth, both sequentially and year-on-year perspective. In terms of geographies, our growth markets, which is really the markets outside Americas and Europe, which is really our Asia Pac, Japan, Middle East, and India market, delivered a growth of 6.1% on a sequential basis. And Americas and Europe both grew about 3.9% on a year on year basis, all in constant currency. Our attrition continues to trend down. It's at 14.2% on a quarter on quarter basis. It's a 2.1% drop, and it is the lowest that we have experienced since the first quarter of FY22. Our employee count decreased by 1% on a sequential basis because we've consciously not backfilled some attrition because a lot of freshers whom we hired in the last 18 months, we are really, they've got trained, they've really become quite experienced in the client engagement. So we've largely backfilled our attrition through the pressure. I have another very happy news to share on an ESG front. EcoVadis has rated HCLTech as a gold category. We are placed in the 94th percentile for our advanced sustainability performance. During this quarter, we also launched HCLTech grants in Americas for the climate action. We've committed about $5 million over 5 years. This program will provide grants to NGOs uh, combating climate change and restoring ecosystems and biodiversity across Americas, which is our largest market. 64% of our revenue comes from there. Now, looking ahead, the next 2 quarters, we expect a very healthy sequential organic growth in our services business. This growth in normal times would have been considered extremely good because it includes a seasonally weak Q3 in the services business. However, for the entire year, when combined with the weak Q1, which we reported last quarter, and a good Q2 that we are reporting today, our overall growth will add up to 4.5 to 5.5% organic growth for services for fiscal 24. We won some very large deals and we've been successful in gaining share on both cost optimization deals and transformation deals. However, the market is still a little tepid on the discretionary spend. At the start of the year, we expected the discretionary spend would start coming back, partially at least, but with the continuing macros, spending has not come back the way we expected. So, from this perspective, our revenue guidance for the full year, including the contribution from ASAP acquisition and the HCL software business, we will end up in the range of 5 to 6% growth at the company level in this fiscal year, of course, on a constant currency basis. Our operating margins, we are confident to deliver within the stated guidance of 18 to 19%. And with that, I will request Pratik to cover some more details on our financials.
Thank you, CVK. Uh, I'll give you some numbers in rupees because that's the country we are all based out of. Uh, the HCLTech revenue for the quarter came in at 26,672 crore, which is a 8% year-on-year growth. What CVK was talking about was constant currency and dollar terms. The rupee terms is 8%. HCL software was up 8.1%, and services at 24,169 crores was up 8% year on year as well. Sequentially, on a Q on Q basis, it was up 2%. Within that, IT and business services grew at 9.5% year on year, and ERS grew at 1.7% year on year. ERS obviously went through a couple of tough quarters, but has shown a healthy organic growth 1.6%, including ASAP 5% sequential. Uh, EBITDA margin for the quarter was at 22.3%, which is an increase of 30 basis points year on year. And in rupee terms, it's up 9.6% year on year. EBIT margin is 18.5, which is 50 basis points above the 18% we had in September quarter last year. And in rupee terms, it's 11.5% growth. And net income profit after tax is a growth of 9.8% versus the same quarter last year. In percentage of revenue terms, it's at 14.4%, which is an increase of 20 basis points over last. Our return on invested capital, ROIC, has improved quite notably due to our continuous focus on profitability and very proactively managing the capital efficiency. So the last 12 months ROIC stands at 32.2% for the company, which is up 350 basis points, 3.5 percentage points on a year-on-year basis. And within that, services is at ROIC of 39.4%, almost touching 40%, and software at 16.2. This was a quarter of exceptionally good cash generation, and on a LTM basis, also it continues to demonstrate very healthy cash conversion. Operating cash flow came in at 10,800 crores, and free cash flow at 10,231 crores for H1, being 147% of profit after tax and 139% of profit after tax, respectively. Our balance sheet remains very strong with gross cash of $2.85 billion dollars and net cash at $2.56 billion dollars. And this cash generation was made possible because we reduced our DSO by 5 full days, uh, and on a sequential basis, quarter on quarter, and year on year, it was a reduction by 6 days. So that is enabled the cash conversion. For our shareholders, the last 12 months diluted EPS amounts to close to 57 rupees, 56.95 to be precise, which is an increase of 11.8% year on year and 2.3% sequentially. And the board has declared a dividend of 12 rupees for the quarter, up from the 10 rupees pace that we were following for the last 2 years. Uh, and now it is 12 rupees for the quarter. And the record date of which will be 20th October, which is next Friday. And the payment date will be 31st of October. And this 12 rupees, so on a last 12-month basis, it will become 50 rupees, uh, which is a payout ratio of 88% versus the 57 rupees of EPS, which is aligned with our capital payout run. So with that, I'll hand over to Jags for some comments on the digital foundation.
Thank you, Pratik, and hello, everyone. Looking at the DFS business, we're delivering market-leading performance. And also, if I look at the pipeline, we're showing the strong pipeline also. While customers are looking for cost optimization, they want to achieve this cost optimization through tech transformation as well as the relooking at this IT strategy. How we want to achieve. If I look at double-click a little bit of the DFS business, we're seeing growth in cloud and networks and next generation networks and also cybersecurity. If I see the cloud, now customers are relooking at this cloud adoption and migration strategy primarily from purpose-based cloud or more pragmatic approach. Our cloud smart portfolio will help them to achieve that particular purpose. Whereas if I take the network, next generation network, services, there are two trends we're seeing. One is the enterprise, enterprises want to transform their network, primarily looking at the on the back of the edge development and hybrid development. And on the another track, telecom providers, they wanted to basically partner with providers like us and then deliver the best value for their end customers. And you have seen the example of Verizon in the last what we have announced. And if I take the cybersecurity as a service line, based on the what is happening around the globe, there is enterprises definitely assigning a lot more budgets allocation to security, and we're seeing quite a good headroom in that particular area. As far as the cost is concerned, we're delivering already excellent world-class services powered by automation as well as our dry platform and infused by the generative AI. And we definitely see that it is a good for from a cost structure perspective, as well as the quality of services and an experience from a customer point of view. So overall, net, when I see this is a good traction to grow the services revenues. On that note, I'm going to hand over to Rom.
Thank you, Jack. Good evening, everybody. I'll just add a couple of more details to what CVK has already called out. The people strength for this quarter closing is a 1% drop. It's 221,139. we did add 3,630 freshers. We broadly will be in line with our plan, quarterly plan for the year. Closed the year with about 10,000 freshers addition for this year. Attrition, again, at 14.2%. It's one of the best years, about 2.1% lower than last quarter. More importantly, if you look at the attrition now, it's pretty much pre-COVID level. So we can say that, we've been through the journey of spike in attrition and are now down to the pre-COVID levels. So that's one of the highlights. Last quarter, we took a decision to defer the pay reviews by one quarter. So we will be going ahead with pay revisions this quarter effective October. So the decision that we took last time that our mid managers and senior managers will not have a pay review this year. We will defer the cycle. That decision to skip the cycle for the mid and senior management remains. But for 90% of our employees, we will go ahead with the pay revision effective this month. So that's going to be part of this quarter's exercise. I'll just pause there. If there are any questions on any of the people-related stuff, we can pick that up in the Q&A session.
सर मेरा नाम अनुवेश रात है, मैं जी बिजनेस से हूँ। सर पिछले क्वार्टर को अगर देखा जाए और इस क्वार्टर को भी देखा जाए तो आपका जो नेट एडिशन है नए लोगों को रिक्रूट करने का वो दोनों बार कम रहा है। आगे चलते हुए इस पूरे साल में आप कितना रिक्रूट करने चाहेंगे और ये जो कम हुआ है उसका रीजन क्या था? दूसरा सवाल ये है कि आपका जो मैन्युफैक्चरिंग सेगमेंट है उसमें जो ग्रोथ है वो थोड़ा कम दिखता है, तो उसको आगे चलते हुए आप किस तरीके से सुधारने की प्रक्रिया में है?
Do you want me to take the headcount question? Yeah. I'm going to respond in English. I can speak Hindi, but maybe not as fluent, so I'll respond in English. It's true that the AMJ quarter and JAS quarter, there's been a 1% drop in headcount. So there are two ways to look at what's happening, right? One, last year, we added about 27,000 freshers. That's one of the highest fresher intake that we have had in the previous 4 years. So we made a lot of investment in getting freshers added to the organization. And there's a lead time by when the freshers turn productive and billing starts. So that's one reason. The other reason that CVK called out is there's also a lot of focus on efficiency improvement within the organization. So those are two reasons why you see the headcount drop the way it is. Going forward, in terms of headcount, every quarter we just moderate our intake based on a number of things. Demand is one part of it. Attrition is also another significant part of it. So that's the reason I called out the attrition. It's the lowest in now almost 4 years. It's effectively the pre-COVID level. So, which is good news. If the attrition drops, it gives us a lot of stability. We don't need to spend too much time and effort trying to recruit. So those are the reasons why our headcount moves the way it moves. It's largely down to fresher addition and efficiencies.
Thank you, Ram. I can also speak in Hindi, but I want all of you to stay in the room. So I won't do that. So manufacturing vertical declined primarily because in some of the projects, we have certain assets or materials like computers and equipments, which are part of the projects. And if you see that component of the revenue has decreased, if you see our detailed P&L, it has decreased by about 25 million. And some of that is in the manufacturing segment. But if you look at the pure services, it continues to remain a healthy vertical for us. Thank you.
Hello. Hi, Saurabh from Business Standard. Good evening. I would like to ask you, this is a big, there is a big revision in your revenue growth guidance for this year. What is the reason? Do you see pipeline conversion not happening at the speed you were expecting last quarter? And the other question is, if you minus the Verizon deal that you won, what is the scenario in telecom and tech vertical? Are you seeing the recovery that you were expecting?
Yeah. So if you see this quarter, as I announced, the telecom, media and entertainment segment has grown sequentially 6.2%, which is a very, very strong growth. We have no contribution from the strategic partnership that we've announced in Verizon, which is going to come from 1st of November, as we had announced. So our telecom business is going to grow really very, very strongly in this year. So we think that's really a extraordinary performance on the telecom segment. And your first question was on the overall guidance. If you really look at our performance in Q1, our revenue had declined Q to